time logs are your friend. The short-term rental is alive and well. It works. Getting a refund of $88,000. Hey everybody, welcome in. And I want to talk about a real case example today. And what I'm going to talk about is a client of ours that used the STR loophole strategy in 2023. And then that client got audited by the IRS. And I want to explain what the outcome of that was and how it all worked out for them. So this particular client had $475,000 of active earned income from their W-2s, right? So that's what was on their tax return. And they decided in 2023 that they wanted to invest into a short-term rental. So they did a new build. It was a treehouse type property on the lake. It ended up being $783,000 all in. So they got into it. They materially participated in it. So they spent at least 100 hours and more than anybody else. They actually spent about 322 hours. And the next closest individual was a contractor that spent about 120 hours. How do I know this? Because I instructed them in advance to keep their time logs, and they did. Now, in addition to this particular client got this property up and running and available for rent by 12/31, and he had proof of this. He had Airbnb that was able to show a report of the dates which the property was available for rent, right? So someone could have rented it the last several weeks of December. It would have been even better had he got this property actually rented out on a couple short-term stays, but because it was short-term rented all of 2024, he can show this was a short-term rental and it was available to rent in December of 2023, meaning it was in service and we can take the losses from it. So before depreciation, this short-term rental in year one had a loss of $96,000. And that's because he kept very detailed invoices. So we were able to break things out for supplies, materials, repairs, insurance. He had some white collar costs there early on, right? So $96,000 was his loss. He also didn't really have any revenues from it because it didn't get up and running until December of the year. Once we employed a cost segregation study and we took into account depreciation and bonus depreciation, those losses went from $96,000 to $326,000. So now he had losses on his Schedule E of $326,000. So instead of having $475,000 of taxable income, he had $149,000 of taxable income. So what did the actual tax situation look like for this client? Well, before anything, he had federal and state taxes of about $126,000 before he did anything with the short term. After using the STR loophole, he had taxes of $40,000 total for the short term, for federal, for state. His total taxes for the year were $40,000. That looked like him getting a refund of $88,000. And he did receive that about 2 to 3 weeks after filing his tax return. So this is great. Client was happy, right? We're the heroes in the story as the accountants, right? So December of 2024, he gets the letter in the mail that this is being audited. We are going to audit this. We see you're a high-paying W-2 earner, and we see that you took losses from your real estate. Good news for him is he's working with us. We educate our clients very actively, very regularly. We tell them to expect that anything that you do could get looked at and be ready for that, right? Especially when we go after some type of strategy that some people, oftentimes agents at the Departments of Revenue or the IRS, like they don't fully understand and they're going to look at it. It's going to get pulled. It's not just going to scan through the computer system and we're going to have to defend it. And as long as it's legal and we know what we're doing and you've kept your documentation, we are good to go, right? So we get audited. The IRS auditor comes in and they're talking to us. They're like asking through the questions that they're asking. And what I realized early on is that they think he's trying to meet real estate professional status reps. So I explained to the auditor that he doesn't need to meet reps. We were meeting the short-term rental strategy with material participation. She went back to her senior auditor who confirmed that what we were doing and said, yep, he doesn't need to meet reps. This is a short-term rental property. Here's what we need to see. We need to see his time logs. We need to see anyone else's time logs. We need to see that he materially participates. We want to see samples of invoices that, so the large invoices he kept on these fixed assets. We want to see the cost segregation report that he used, that the engineering company did for him. And that was the bulk of what they wanted to see, right? We had a few other things that we showed them and went over with them, but that's what they wanted to see. We provided them all that information. They had a couple calls back and forth with them to make sure they got what they needed there. And on February 5th of 2025, we received a call that the audit was completed and there were no changes to the tax return. So this client keeps his $88,000 refund. So a couple key takeaways from that story, right? time logs are your friend. I know a lot of people are not fans of them. I know a lot of people are like, man, I don't know, I don't need to keep them. Keep your time logs, right? Especially if you're using a cost segregation study, especially if you're doing anything that gets looked at, right? Those time logs saved him. They would have disallowed that in a second without time logs, right? So he had his time logs. He did some updates and made sure he got everything tick and tied out on them, but we had them in there, right? It would have been very hard to recreate an entire time log. If you're going after strategies such as this, have a time log for anyone else that worked on the property. They honed in on that. They're like, hey, who else worked on it? Well, we had a couple small contractors, but the only main contractor was the guy that built out the basement and did all this and finished the basement. Okay, what's that guy's hours? Here's his time log. Okay, can we get him to sign that? Yep, here you go. So those types of things, they are looking at them all the time. That's what they want to see. The third piece that they honed in on was this actually rented or available for rent, and what proof do you have of that? So make sure you have proof that it's being rented or available for rent. But those were the big pieces. Also, obviously, keeping those invoices. And we educated them on that. Hey, keep your invoices, upload them to our portal. That way we have them. We upload your material, your time logs to our portal. Those are all things that, some clients skirt by and they're like, yeah, I got it. And I'm like, okay, if you want to hold yourself accountable and you want us to hold you accountable, then you do this, you upload it for us, and it does two things, right? We can then access it if we need it. We don't always need to, and hopefully we don't need to, but when we do, it's there. But secondly, it holds you accountable. You know that, hey, every time I do a property, I do something, I got to get them my invoices. I got to get them my time logs. Like that way it's there. It gives it to you then if you ever need to pull it, right? So these are all things that will save you in the event of an audit. In this case, you can see the short-term rental is alive and well. It works. It saved significant taxes. It got upheld within an audit. But again, you have to know what you're doing. And this case also tells you that not all auditors understand this, right? So it could get looked at, and this happens frequently. I've had multiple audits where this happened, where it gets looked at because of a misunderstanding or something that the auditor did not know. And we have to explain it to them. We have to show where we are, where our position is. We have to reference the tax code and do things like that. Or in this case, we got lucky that she had a senior auditor that was able to help kind of explain that and confirm what we were doing there. Last piece, which came up in this audit, which just to touch base on, is this item of your time log and travel counting towards your hours. So in general, for a lot of real estate investors, travel time, like to and from properties, it's a gray area. Sometimes it counts, sometimes it doesn't. There's nothing written in the code about it. So we have to go off of case law, meaning when a court case happens, we have to keep updated with that and see where they at. So in this case, I told the client, I said, track all your time, track the mileage, and track all the times you're traveling to and from there. But I want that travel time tracked separately. So I want you to meet over 100 hours more than anyone else without your travel time, right? And so he did. And the auditor came back and said that we broke out the travel time. It currently does not count. Based on case law, that travel time does not count. He still met it without the travel time. So key point from this case, if you are more of a sophisticated investor, is that your travel time will not count towards your real estate professional hours as of February 6, 2025. All right, guys, I hope you enjoyed this breakdown and this real case example of a client of ours that just went through the short-term rental loophole and got audited, and it was upheld. And hopefully it's given you a little bit more confidence in what you're doing and hope give you some pieces of what to expect and maybe outline that process a little bit better. You can live life, be risk-free, and probably don't even want to get into real estate if that's the case, and pay as much tax as you want and do what you want to do. If you go after one of these strategies, expect that it could get looked at. We're getting a little bit, I wouldn't say aggressive, but we're definitely going after some strategies that aren't seen every day, aren't just going to fly through the computer system of the IRS and be, no one check them. Every once in a while, they're going to get checked on, and that's them doing their job. That's what they should do. And we're doing our job to make sure you're educated and that we can uphold it. I appreciate you guys tuning in. If you found this content valuable, jump over to reitaxu.com. Join us at REI Tax University, where we talk all things tax planning for savvy real estate investors.